This is the More Doors podcast. This is episode 60. We are back, the united crew for the first time in a few weeks. I'm super excited about it. We have an amazing guest that has had an incredible journey, and she is going to share her story and a lot about what it's like being at a fully integrated multifamily operation. We're going to be back with all that and a ton of great nuggets right after this. All right. Welcome back. The trifecta.
Everybody's here.
We are here.
The gang's all here.
You guys held it down for me on a couple of weeks where I was out of the office. I really appreciate that.
No problem.
Yeah.
No
Travel
problem.
schedule in the first 5 weeks of the new gig has been a little strenuous. So It's good to know that you guys hold me down.
I feel like
We definitely hold you down. Yes.
Weird. Okay.
Yes.
Good job.
I think we've all been traveling a lot.
Yeah. I mean, not all of us go to World Series games, but
Well,
Yeah.
yeah.
That was bittersweet.
From an Alaskan cruise and riding whales, orcas to World Series.
Going
Not
to
one,
Tony
but
Robbins
two
in a few
games.
weeks
I
too.
know. Like you're a Johnny Travel a lot.
I know. I booked
Went
all this
to
stuff
Napa,
along.
right?
Yeah, we went to Napa. That was fun. I just got all my. Do you know? I usually have all the wine shipped to the office, but I forgot this time. And the reason why is because you have to sign for it, and we're never home during the day because we're at the office. And so my wine got rescheduled a bunch of times now.
Oh, sorry to hear that.
I know. So it's out there.
So you
I have like
are
two
you saying
big
you're
cases.
dying of thirst because your wine hasn't gotten here yet?
I'm definitely not enjoying the fruits of our trip the way that I thought I would be by now. So I've got to really figure that out.
Sounds like first world problems.
It
Totally.
definitely is.
Yeah.
Unbelievable. Well, we are here,
We are here.
episode 60.
Yeah. Somehow I missed 59. I don't know where it went.
Had a doubleheader today.
Yeah.
That's it.
Well, you know what is also here? Our awesome sponsors. Check out torestudios.com, the home of Tour Studios, for all your multimedia content creation, YouTube podcast needs. And then head on over to deepbluere.com. That's the home of Deep Blue Capital. Create your investor profile over there for a whole bunch of good, great educational content we've got over there, as well as early access to all of our upcoming investment offerings. That is deepbluere.com. We have got an awesome.
Also, you got to say, go and leave us a 5-star review.
Oh, yes.
Because I don't normally have it on forward, so it looks weird to me. But you got to go get some swag.
Yeah.
Right. So anytime you leave a 5-star review, just send it to us and we'll send you a Deep Blue Capital hat. And I think Matt finally got his today.
Finally.
I know.
I brainchild the thing and I'm the last one to get anything.
I know.
It's all right.
Been sitting in my
Better
house.
late than never. It's like at this point, it's just a Christmas present. So thanks, guys.
Yeah, exactly.
happy-
Delayed
yeah, Merry
gratification.
An unwrapped and wrinkly Christmas present.
I still got the tags on it.
I already gave a 5-star review. Does that mean that I get a hat?
Yes.
Totally.
Sweet.
We
Yes.
can have one of my used ones.
Perfect. Even better.
We have got a fantastic guest today, and I'm really, really, really excited to dive in with her. Please welcome the SVP of Company Operations at Aldon Management, Sarah Jane Milliren. Welcome to the show, SJ. Thank you for taking the time.
Yeah, thank you guys for having me. Appreciate it.
Yes, ma'am. I never like to do people's intros for them. So, if you could take a little time, give us the elevator pitch, the background snapshot. Tell us a little bit about Sarah Jane.
Yeah, I wish I could talk to you guys about how I too was in Alaska riding orcas or out at Napa. But Sarah Jane is residing about 30 miles outside of Green Bay, Wisconsin. And I started in Southern California in the multifamily industry back in 2003. Worked for an owner-operator out there. I've traveled the country a little bit over the years and joined Aldon. We're based out of Bethesda, Maryland, so right outside of DC. Joined in 2021. Have had an awesome opportunity over the last couple of years to really be a part of the company's growth. So I guess I could say I professionally grew up in multifamily. So I'm starting on site as a leasing consultant and having the opportunity to do a number of roles outside of Aldon. I'd say I'm in my granny era. I very much enjoy crafts and quilting, and you can't live out here without loving the Packers. I think they don't let you move to Wisconsin unless you like sign up for that. So yeah, that's just a little bit about me.
That's awesome. And we're definitely going to have to get to the quilting before you end, by the way.
Brian is our resident seamstress, by the way.
Oh, awesome.
They give me stuff all the time. I tailor all my own clothes.
Did Brian make his Halloween costume this year?
I didn't have
wearing
time,
it, actually.
but yeah, I wanted to. Tell us a little bit more about Aldon Management. Obviously, you've been there for a few years now. Give us a little bit of an idea of the company, what markets you operate in. Kind of give us the background on the firm.
Yeah, so Alden, pretty awesome. The company started back in the late 40s. So after the war, two brothers started the company. A total legacy. Definitely a company built around family values. They built their own communities. They did the development, the construction, the management. Up until recently, we've owned some of those earlier pieces of real estate. So we had a long period in the Alden history of owning and managing kind of, I'll say like in our backyard. Back in 2021, we started a new phase of growth, expanding outside of the DC metro area. So currently, we own and operate in North Carolina, in Raleigh, and in Greenville, South Carolina. We have a property in San Antonio, Texas, and in Salt Lake City, Utah. So definitely a healthy mix of markets, and we're really excited about our future and our growth. I think those 4 states are definitely ones that we're committed to, and hopefully we'll be acquiring more real estate. We definitely follow more of a model now of we purchase something that would be garden style or mid-rise, something that's maybe just out of lease up or a couple years old, and then have the model of long-term hold for our portfolio.
Love it. So, we've talked a lot amongst ourselves and with others about the advantages of having, I don't want to use the word centralization because it's so cliche, but like clusters of assets, right? So we have some in Garland. We're looking for more in Garland. We have a bunch in Arlington, Texas. We'd love to continue to invest there, right? And you take advantage of economies of scale. What caused you or caused the company to want to start investing outside of DC? And then why did you choose those specific markets?
Yeah, great question. There's a ton of value with the economies of scale. So it was definitely 2021 was a monumental year for us. So we closed on 3 assets in 3 states within 7 days. So it was really about like kind of planting our flag in those markets originally and then being able to grow around it. We were looking for markets that I think probably other investors also is like, we want high population growth, great job stability, being able to be in an area that I'll say is, landlord tenant balance so that it's, from a business model perspective, that it's not prohibitive to do business there, and really just areas that we saw would have growth in the future because we do buy to hold. And so, it's been quite the adventure. We're still very interested. We still love the DMV or the Northern Virginia, Maryland, DC area, but that's just not where we've invested recently.
Gotcha. When you think about the assets in DMV, as you called it, SJ, like what is that market like? I in my own head, I think about, you kind of have the sphere of influence around DC, right? And kind of a lot of high paying jobs and probably older properties, but top end of the market type properties. And then you have some of the outskirts where, I think about, Baltimore and some of those other markets. So where within that zone do you and Alden like to operate?
Historically in the past, we were in the actual District of Columbia, and we were in Bethesda, which would be, I guess if we look at DC as kind of a square, it'd be like 10 a.m., 11 a.m. on the square. Bethesda is where our corporate office is out of. I think, looking forward, we would expand the look into Northern Virginia. So that's your Arlington, Alexandria, kind of if you look geographically at how the Potomac goes, kind of, that area there. And it's full of growth. There's, tons of job stability there with, higher education, with government workers that are there. Different pockets and counties are going to have different regulatory requirements. Some have, over the last, 5-10 years, put into place rent stabilization or rent control, which adds another layer when you're looking at underwriting or developing an asset. So it definitely, I think there's a lot of opportunity still there. And that would be the area that we would be looking at in the future.
Gotcha.
So you, as you have expanded, like you said, that was a monumental year when you expanded into different markets, which means that you have the vertical integration locally in the DMV area, but you also have third-party management, I assume, for a lot of your assets in other states. How do you manage both of those systems when you're having third parties on some sides and you're vertically integrated locally? What does it take to really keep everything in balance?
Yeah. Well, so a couple of things. One, we're vertically integrated in the Carolinas as well. So the real estate that we own, that we've bought in 2021, 2022 in Raleigh and Greenville, most of that we manage ourselves as well. So it kind of provides a pretty complex, we have fee managers in Utah and Texas where we don't have the economies of scale yet. And then more of our East Coast is vertically integrated. I would say it probably sounds cliche, but you have to find the right partner. I know that's one of the things that we look at when we're acquiring an asset of, okay, well, who's the management company that's currently in place, potentially evaluating, if we were to keep this under fee management, just depending on where it is in our investment cycle at the time, taking on multiple pieces of real estate simultaneously like we did in 2021, it wasn't feasible for us at the time to say, hey, we're going to kick up 3 regional operating centers in 3 separate states. So it was looking at which ones do we take in-house initially, and then, who do we want to partner with? Not just, who's going to manage the sticks and bricks, so to speak, but who's going to be more like-minded to our values, how they treat their people, how they look at technology, how they look at what position they want to play in the market, like their reputation that they would have, because we look at that as, hey, they might not have the same name or logo on their uniform, but it's still an extension of us and our ownership, and really wanting to be aligned with that. So it's exciting. It definitely is, and you get a lot of kind of best in class expertise when you're able to work with a third party operator. But I'm not going to lie. In the role that I'm in, I very much like managing what we own and being able to do things differently. We are able to really kind of be the entrepreneur or charter our own path as our company of how we want to handle, kind of the employee experience, the resident experience, and how do we differentiate ourselves amongst all the other product that's out there.
So with you guys having, your own management as well as having third-party fee managers, and with everything going on in this market cycle, how are you guys adjusting just y'all's leasing team, the fee managers leasing team to help best approach what's going on, cyclically right now?
Yeah, it's a tough market. Those of us who have been in the industry back, say 2007, 2008, it's definitely an opportunity for us to encourage those who have joined the industry more recently that, this is part, like you said, it's cyclical. So being able to draw back on our experiences then to encourage our teams now. One of the things that I think has always been paramount for us is how we treat people and, our customers' experience, our external customer. But I think in this type of economic phase in the cycle, it's so much more important to build relationships. So making it more relational and less transactional, like we look for opportunities to say, are there any ways that we can automate the transactional pieces of our business so that we can focus on the relational portion. And then we, speak frequently with our third party management. I mean, we're definitely a very collaborative and active owner in the pieces of real estate we have that others manage for us, to collaborate on how that looks like with them too. We're seeing now in this economic cycle that we're starting renewal conversations sooner.
Mhm.
It's not the typical, okay, we legally have to give notice X days beforehand, so let's back up Y days before that and send a letter and just expect people to like flock to us and be like, oh, can't wait to stay and sign. Of really cultivating those conversations and having the touch points more frequently, so that when they hear from the folks in the office, it's not once a year pre-renewal. So I think that's probably one of the bigger differences that I'm seeing. Also, just with how much the volume of supply that's entered all of the markets that we're in, are very supply healthy. And so people have more choices. It leads to people taking longer to make decisions. It's not like it was 3 years ago where people are knocking on your door and be like, I'll take anything you have. It's truly, hey, I have 8 or 10 options. So I'm not going to be making a decision on my first tour. I need to see what my options are. And so cultivating the relationship through the tour process, I think, is even more important, and not putting specials out there right now of like, well, if you lease today, because we find that most of the people that we're seeing are taking a lot longer to make their decision on where they're going to live. And so not having kind of a pricing or specials tactic that puts the emphasis on a quick decision. It's more about how do we partner with our prospects to educate them, so that at the end of the day, when they make the decision, if they do choose us, that they feel a relationship's already been built.
I love that. So there was two things that you said there, Sarah, or two dates that kind of collide. You acquired, it sounds like a number of assets back in 2021, which was a vastly different market than we're in right now, right?
Right.
And then you talked about all the supply coming in the market, which is, created some supply levers. There were a lot of folks that acquired assets back in 2021, 2022 that made very aggressive assumptions, that didn't realize the impact of inflation, that maybe didn't realize there was a tidal wave coming of, insurance hikes and property taxes and all that sort of stuff. How have you and Alden managed to be successful, making those assets profitable and productive amidst this market cycle, when you're literally talking about almost opposite ends of the underwriting spectrum?
Yeah, it feels like opposite ends of the underwriting spectrum. I would say that, evaluating our risk on the front end and not making decisions back in 2020 when we're looking at these deals that, to take advantage of maybe some market surges, because we're looking at, what is the next potentially 15 years of an asset's life cycle, and how can that particular asset withstand changes in the market? Obviously, in 2020, 2021, we don't know the future. We didn't know when the supply was going to surge in and what the, near and longer term impacts of COVID to our industry was going to be. But I think it was, helpful for us to have a really long history of managing multifamily. We're pretty nimble. I mean, our size is smaller than some other owner operators, although we have a vision for growth. It did enable us to, I think, kind of draw on our past experience, both as like people who work for Aldon, but also kind of in the DNA of the company. And then not making decisions, we go out and we underwrite these properties that we're not going to underwrite them, best case scenario, but maybe more of a midline of, a moderate case scenario, and being just really mindful upfront of the risk that we take on, so that we can withstand, the unexpected. It definitely helps to be in, I think, having different markets, so the portfolio can be a little bit more balanced, that not all of our real estate is in one pocket, that potentially everybody gets impacted simultaneously with the same struggle. I think that's something that, they're all healthy, so they're all experiencing the supply challenges right now. But if one potentially is struggling more than the other, the rest of the portfolio generally can provide some stability to that.
Amazing.
And so when you talk about how you're underwriting for a more moderate scenario now, are you finding, I ask a lot of operators this, and I always like to get kind of a pulse on the market in different areas. Are you finding that the bid ask on the things that you're underwriting is still relatively wide, because even as the market has adjusted, your underwriting has also had to adjust as well for some pretty uncontrollable variables in the future? Do you still find like we're a little bit of a ways apart, or do you feel like that's narrowing?
I think that there's still a pretty big disparity. We haven't, we purchased one piece of real estate earlier this year, but I think the slowdown of our acquisition efforts kind of speaks to the fact that there is that gap in the bid ask.
Yeah, I agree. It feels like that everywhere.
Yeah.
And we're waiting for. I shouldn't say waiting for. There's been a lot of talk about pipelines filling back up and things like that. I just think that you have to be very, 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 conservative is an overused word, but you have to be very practical about your underwriting right now. And I think that's actually where we're kind of, even if the ask is coming down a little, the bid is still going a little bit this way, because you're still facing headwinds with variable expenses like taxes and insurance and things like that. And so it's like both goalposts are moving at the same time a little bit.
Yeah,
And
I completely agree.
Keeping it a little wide.
Yeah, I mean, we've seen this on our own stuff, right? That deal that we underwrote a couple of weeks ago that we're going to tour next week. We had pumped up our assumptions, right? Our CapEx reserves, some of the other assumptions, but we felt comfortable enough to throttle them back a little bit, but still above where we were 2 years ago, just because so much CapEx had been pumped into the property, right? And I think that any good underwriting team needs to be constantly looking at the assumptions, right? Like we were talking about insurance. Insurance just continues to go up and up and up. And every time I talk to an insurance broker or even a lender lately, they're like, this has got to be the top. I'm like, dude, you said the same thing 2 years ago.
I say 18 months ago, we're pretty sure they're coming back down by next quarter. There's no way they could keep going up.
Yeah.
Like,
we'll show you otherwise.
yeah, exactly.
But speaking of that, SJ, you before we started the show, you mentioned that you have been heads down with your budgeting cycle for Aldon, and I think you've been doing that for a while, and you're going to wrap it up tomorrow. So congratulations on that. But
thank you.
When you go through that budgeting process, like what does it look like, and how have some of the common things, like common costs like G&A and marketing and insurance, impacted your budgeting cycle going forward?
I think it's made the cycle feel a little bit longer, because you go in with some typical assumptions. There's, depending on how like the budget model's set up, maybe you put in modeling methods of saying, I'm going to do, year over year, and I'm going to apply a growth percent, or maybe I'm going to, take a annual dollar and, annualize it over the year. But I find that, we start early because we have an early due date, which I personally love. I feel like when we're starting in July, August, everyone's like, oh my gosh, we start so early. But it's so nice to have your budgets done before the holidays hit and like be done. Have it, accounting's received it, lenders have received it, it's loaded into the software. I've seen a kind of a lengthening of the conversation around the items that you're speaking to. So insurance. Okay, let's look at what are our options, and let's go out to the marketplace, and let's enlist our broker on having conversations on what does our coverage look like and who is our partner in this space. So, or maybe in the past, some of the budget cycles were, I don't want to say easier, but maybe a little more cut and dry of, oh, insurance is going to be up. And I picked that because you had mentioned it, but X% year over year. We're not applying that same type of year over year model to many of the different GLs. We're really looking at what are our other options? What are our other options with our tech stack? Let's look at our payroll and our benefit analysis. I mean, that's another one that over the last 4 years has changed tremendously. Rents are up, yes, but income's up. So we are the beneficiaries of having increased rent as the, property owner, but as the employer of the people who work there, I mean, simultaneously our wages and our costs have gone up with that too. So it definitely extends the conversation. Some of the things we kind of wait more towards the last minute. Like, we just want to make sure that, no surprises. Is there one more utility company that I could look at to see if they've published something that'll give me any insight on my projections for next year? So, yeah, excited to be home stretch though.
This is a very interesting conversation around budgeting. We had a little bit of a conversation earlier today on sort of the future of the software side and the tech stack and creating more holistic solutions and maybe how AI can become involved in things like that. Are you finding, let's just take your tech stack now, or maybe what you pay on a per door basis for technology, software, however you want to kind of describe those tools, in an era of like a lot of specialization in the tech world or in the software space, are you finding that you're paying more or less per door for those solutions? Has your tech stack grown? And if so, is there actually an offset to some of your other costs? Like, are you getting a return on that?
Yeah, just speaking off the top of my head, I think it's remained pretty flat because we do look for, like, if we're looking into a specialized product, and budget's a great example. We switched our software that we were using for budgeting a few years back, and so it's like, okay, well, how are we going to offset this cost? And it wasn't something that we deployed. We currently don't have any centralization models, so we still have the same kind of headcount and positions that we had on the site. It's more kind of a traditional look right now. So I was like, okay, well, what other things, if we're speaking in terms of tech stack, what provides value? What do we use? So many times it feels like you either buy something that's bundled or somebody bought it before and nobody's reevaluated it to go, does anybody use this? What return does this give us? So that's kind of the approach that we would take with technology. Although I do love a year-over-year savings, it's more of like, of the money that I have, how do I more wisely allocate these funds to provide efficiencies for our team? When it comes to budgeting, how do we make this easier, but also have more accurate projections in the forecast of this year and then being able to look into next year?
100%.
Yeah. I think that's really important. And it's interesting because, I come from software sales as you know, and it's very interesting how on the sell side, we come up with these very fancy ROI documents, right? And we were talking with Andrew before about when you have the data, you can pretty much make it look like whatever you want to, right? But it's interesting how you're kind of applying that ROI lens on the buy side, right? And kind of really finding ways to identify whether or not you're truly seeing an ROI. So, if you don't mind, can you, if you're thinking about you and Aldon as the consumer of a piece of software, like what are some of the things that you dial into to make sure that the ROI is going to be there?
I think first is it has to have some differentiation. There has to be some, like, what problem are we solving for? Like, we're not going to go out and buy something because it's the coolest, latest, greatest. There's a lot of buzzwords that are floating around. And so I try to be pretty mindful with the team that I work with on, let's evaluate things before, deploying software, doing a migration or an implementation, the change management, it's a heavy lift. And so we want to be prudent in the decisions that we make before we bring that on internally. But really, like, do I have a need that I need to solve for? Or, kind of old school terminology, did somebody build a better mousetrap? And I personally, when I go out and I look on the software side of things, having, a couple decades of experience with some of the larger software providers, and then it's been really exciting the last, 5 years of seeing more kind of niche offerings of, why am I looking for this? What is this going to solve for within my company? What benefit. I mean, ultimately, I look at the ROI of how does this help my team on site provide a better work life for them? And how does this help our customer provide a better experience for them? That to me is far more valuable in seeing it in practicality than having, a white paper or one pager on, some, forgive me, like buzzwords of, oh, well, you're going to be able to increase your NOI by three times year over year. It's like, show me the math. Please, I mean, enlighten me to, the magic behind the curtain, so to speak. So I try not to lean too far into, the salesmanship of it and really come at it from a lens of, what are we solving for?
Yeah. When you think about, you mentioned before the idea of can we automate this is a question that you ask, and your job is obviously to make sure that you're getting an ROI on the tools that you're using. What are some of the things that you actually are excited about coming down the pipeline in the next few years that maybe will create a better resident experience through automation and things like that, and also, work financially for the company to offset some stuff that you might be doing manually right now?
I think one of the top things that would come to mind is something we actually just deployed this year. So previous to this year, we would do through the leasing process, somebody comes in, maybe they're in person, maybe it's remote. Traditionally, they apply for an apartment, they show their ID, maybe they show their social security card, depending on how the workflow is set up. The person in the office is like, okay, yes, that's you. And then, okay, we need you to provide proof of income, and we would have our policies in place of what that would look like. And the person's like, yep, and that's your pay stub, and X times Y equals Z, and we're good. But we've noticed, and I think this is, we're not a special unicorn in noticing this, that the industry has noticed it doesn't work like that anymore. The people on site, we expect so much of the talent that we have on the property level. I mean, they are anything from a salesperson to a financial analyst to a psychologist to a firefighter. I mean, these people have such a robust skill set. It's like, are we doing ourselves and our, the experience from the prospect? Is it easy to do business with us? But are we putting too much on the site folks to say, hey, we need you to be an expert in ID verification, and that piece of paper you got that said they make X, you need to be a super sleuth. You need to say, is it real? Do they really work there? Do they really make that much? Is the document altered? Like, that is a lot of responsibility. And, our folks on site are approaching with this, they're trying to provide this real positive and, kind of fun experience of, oh, you're choosing your new home. Like, we don't need them Googling and being, part of, we're not the FBI is what I would say is, that's not really what we do. And so we found a technology partner that has, initially the sites were like, oh man, this is one more thing. And none of our peers were doing this. So when people came to lease with us, the prospect was like, well, down the street, they don't make me do this. 1 month in, everybody on site, this was monumentally this year in the budget. Whatever you do, don't cut this service. Having a technology platform provider that does all the identification and the income verification. So the site team is not involved in those conversations. They don't have to be the one saying, I got to get this right, or I'm going to move somebody in who potentially doesn't really qualify. I think that was probably one of the more forward-looking, kind of early adopting things that we've done recently. And it's been awesome. I mean, sure, there's going to be more fallout on, maybe now the people, our percentage of applicants that are canceled or denied is greater than it was before. I'll take that all day long over having bad actors and bad debt.
Yeah, I couldn't agree more. It's funny. This probably is an earlier conversation that we had. You break it down to the principles, right? Tenant experience, having a better tenant experience, resident experience, we should say, than other operators is a huge goal of most firms, right? How do we create a better, more robust resident experience? And that's from the move-in process to the daily. That's just the day-to-day of living at one of our properties. If you can, or when you can, do you can kind of offload application integrity to technology, and you don't have to do that manually. And then you combine it with things like deposit insurance, and you lower the barriers of entry to getting into a really great unit. like you're winning so much of the battle up front right there. You're really creating a wonderful resident experience right out of the gate, and doing it on a basis that, like you said, reduces your bad debt as well. I think that's huge. That's been such an analog process for so long, the application verification process and everything that goes into it. I agree 100%. I think the biggest place in the workflow that technology can provide a lot of solutions going forward is just like automating that entire thing while providing a really seamless experience. Not automating in the sense of like it doesn't work and the tenant never knows what's going on. Like really making it a better experience, because you're not asking a single human being to be responsible for all these different elements while they're doing everything else.
Well, let me ask this: how, SJ, have you noticed the turn time, how quick it is to get to an approval or denial? Because one of the things that we track here in our residential property management company is the time of application to either a denial or approval. And we've noticed the longer it takes of trying to either get employment verification, income verification, et cetera, the longer that takes, the greater chance that the potential tenant becomes unresponsive. So we're doing our landlords ourselves a disservice. Does this cut down that time frame needed and just making operational flow more efficient?
I don't know that it cuts down the time. I haven't done the analysis for it, because in theory, if the consumer, the prospect, is responsive, as soon as they get the email, they log in and they follow the workflow. It's a couple more clicks. But the answer, the decision is so fast. So we find that potentially if there's any lag or delay by adding this more automated step, it's because the end user is not pushing themselves through the workflow. But it's not something we tracked before, of like how many days does it take from the day you first apply until you back in the past, you bring in your paper pay stub or you email your pay stub in. So don't really have anything to compare it to. So right now I would say it is not adding, but it has not shortened that timeline.
It's just made it more efficient, right? Like, how long it takes now, but it wasn't something you were probably tracking before because a lot of it was so hands-on.
Yeah.
And I think there's a big change management to the consumer. I mean, when you go and you apply for a loan for a home, people who have gone through that process know how, I'm going to call it, financially invasive. They want to see everything before they give you their money. And in multifamily, it never was like that in the past. Like you could literally bring in one thing and be like, here you go, and I'm done. And that's not what we're seeing in the future as being, the best path forward. So I think it's kind of retraining people to see like it's not as easy as here's just one piece of paper, but there's so much value in it, and how we teach our team on site to be able to explain the value to, in this situation, the value to the prospect on like why they have to do it. And it's not invasive for the sake of being invasive. I mean, every app on your phone probably has your credit card or banking information, so you can use your thumb and be like, I just got everything delivered, So I guess kind of looping that back, you had asked a question of like, well, what are you looking forward to in technology in the future? And I think it's really the app experience, because yes, I know like we have a app and it links to the portal, and that's where you can put in the work orders and pay your rent. And there's, I could definitely sell anybody on saying, I could tell you all about the value. But as the user, the one who has the apps on their phone for everything else, is it as easy as getting my Starbucks? Is it as easy as my Amazon purchase? Like I only want to click maybe twice, maybe. Yep. And so I think that there's going to be opportunities. I haven't explored any right now, but that would get me very excited to see like, what is the better resident experience in the app? So with like using your thumb, phone in hand, hopefully you're not driving, can I click 3 times or less and get what I need to have done? And like, right?
Yep, that's such a good
point. We live in a world with like instant information and everything's instant. I mean, right now I could click a button and lunch shows up in 10 minutes. Like in multifamily, we don't have that yet, but I think as consumers, people are used to that in all these other industries. I think we have some catching up to do.
It's the right benchmark. You make such a good point. I think that you hit the nail on the head. I have kind of this ideology that we track things as far as technological advancement and user experience. I think that we look at them in a lot of industries in a flawed way, and the way that we look at it that's flawed is my user experience better than my competitor? Is my user experience better than it used to be? Is my user experience better than it was 5 years ago? And I think that's the wrong benchmark. If we're really looking at creating a better resident or applicant or tenant experience, the benchmark shouldn't really be what is our competition doing. The use case should be everything else in their world that they use technology for, right? It's not like, is our application process better than the guy down the street? Is our process as easy as them ordering something off of Amazon, right? Yeah. Not that it's ever going to get quite there, but that's sort of the benchmark that you're trying to provide to get a really good adoption. Is how does this compare to everything else in their world they're doing? When they put their information in, they expect a certain result in a certain way. They've become accustomed to that, whether it's a cup of coffee, that's exactly what they wanted, or a package, or whatever it is. How do we get closer to making it seamless in that way, rather than just looking at how we used to do this one process?
Right. And I will always say to my team, I was like, just because it's better doesn't mean it's good.
Yeah.
So better is just a trajectory. It doesn't mean you've arrived. So, I mean, I'd really like to look at something, to your point. It doesn't matter if it's better than the competitors if they're all awful. And I'm not saying that it's awful, but it's just not comparable to what we see in the world around us outside of, our own app, so to speak.
I want to double tap onto this because this conversation came up when we talked to Andrew Bowen on the show. So Andrew made a point, SJ. I think you know Andrew, right?
I do. Mm-hmm.
We were talking about technology adoption within multifamily, right? And how there's a very distinct difference between early adopters and laggards, right? And how multifamily just really hasn't kept up with technology developments. And it's very clear that you have a great perspective on usage of technology and adoption of technology. But just in your own words, in your opinion, like, why do you think there's such a clear distinction between companies like Aldon that are looking to use technology and software to find operational efficiencies and enhance the prospect and resident experience, and those that aren't or haven't been as aggressive?
You're talking about like within multifamily, like between different owners and operators, why some are pursuing and some aren't?
Correct.
Yeah, I don't know. I mean, maybe it's if it's not broken, don't fix it. Or if it's, satisfactory, it's definitely easier. The path of least resistance is doing what you've done. And, the change management's really hard. There is a lot of noise in this space on the multifamily tech side. And so I think, it's easier to say, hey, I'm going to block out that noise and just continue to improve on what I'm doing versus kind of switching models, no matter what part of our, business that we're looking at, to say, no, I'm actually going to do something different. I think it's interesting in multifamily, just the creators of the software, plural, aren't the users of their own software. So sometimes I wonder, like, is that what provides the disparity? Like, I don't know how to code and make programs and software. Like, I guess, the four of us, we could come up with something really cool, but could we execute on building that? Probably not. We probably have to hire somebody else to do it. Or somebody's in our ear saying like, hey, I've built this brand new thing. And now we have to spend the time, which most of us probably have such a limited amount on. Then we have to go through and vet it all out. So, I can't speak to others. I know, for myself, for Aldon, it's really exciting. It's exciting to be entrepreneurial and where we're investing, but also how we manage our buildings, and that we don't have to say, well, just because this is the way that we've always done it, or just because everybody else does it this way, doesn't mean we have to kind of fall in line.
Yeah. That's a really interesting point, and I think you're totally correct in that some of the disparity between operators that do or don't, currently or constantly having an eye on refinement and better solutions and better processes. I think one, the disparity does come down to a fundamental understanding of your processes, right? Like having somebody that sits in the seat that SJ does and goes, what is the key solution to smoothing out X, Y, and Z process, and are we going to get a return on that? Like that's already a really talented person inside of your company to be even able to identify where your resources are best spent as far as undoing bottlenecks and making smoother processes and things like that. I think on the other side, you hit the nail on the head though. The designers are usually not the users, and we're all in this space, so we see this stuff all the time. We see new every product roll out, we see new every feature roll out, we see all that type of stuff, and there are a lot that companies will throw at you as far as here's our new integration, here's our new thing that we're excited about, and then you roll it out and you see the way that it gets deployed, and you're like, this is not necessarily a useful item in my business to actually do anything other than you made some information that was over here show up over here, but it's not as practical. And it can be really difficult to cut through all that noise and see what is just like a practical implementation.
I think too, look, I'm a sales guy at heart, right? I think there's a lot of solutions that are very feature heavy and they look really cool.
Yeah.
Right. And maybe there's a little workflow behind it, but to SJ's point, right? What is the problem that we're trying to solve?
Yep.
And that's one of the things I really kind of try and really reinforce with my sales team. And, I go back to Nick's favorite quote, right? Money changes hands when problems are solved. And I think that's really the core of what, good software and good technology does. We're coming up on time. I got one final question for you, SJ, and then we'll start wrapping up the show. This has been awesome, by the way. Like, as you look at 2025 and 2026 for Aldon and the markets that you operate in, what are you looking for? What do you think is on the cusp of the new year and into the short-term future?
Yeah, thank you. It's been fun talking with you guys. I think 2025, we'll see most of the product that's been, available start to stabilize. So we'll kind of get a little bit of reprieve. I think for us internally, it's going to be about how do we refine? I mean, it's really hard to, try to play catch up on things when, we've entered a concessionary market and rents aren't growing either like they used to or at all. And, we're getting a lot of pressure being put on NOI that to be able to have an opportunity to say, hey, we put all this effort in here. We've hired some amazing talent in our regional team, at our property level, both in the office and on maintenance. We reorganized how we did some, we call ourselves a support center in lieu of a corporate office. I'm really excited to see the outcome of those decisions that we've made this year, the investments we've made this year in the talent that we've recruited to say, okay, now let's take what we have and let's really polish it up and look better next year.
Awesome. This has been great. I don't think we've talked to anybody like SJ who's kind of so geographically dispersed. Maybe Zach, right?
Yeah.
Maybe Zach, but such a technology forward perspective and operational, financial, the whole thing. So this has been really great for me, SJ. Thank you.
Yeah, it's
been amazing.
I appreciate it. I love multifamily. I mean, clearly I'm still doing it after all these years, but I will say, having sat in most every seat, I've never done maintenance, but it provides just a different level of, questioning or an understanding that it's really seeking to understand and knowing like, yeah, technology has changed since I was a leasing consultant, but still understand the fundamentals of it and then being able to engage in the conversations, listening to our people and like, how can we be better? Because it certainly is not, I don't have all the answers. I definitely don't have all the ideas. I need a team around me. And it sounds cliche, but I think that's the only way to be successful is to surround yourself with really smart and really creative people who feel safe to share their ideas and make mistakes. And I have that here. So it's exciting.
Could not agree more about surrounding yourself with the right people. So, Sarah Jane, where can people find with you find you if they like to connect?
Besides outside of Green Bay, Wisconsin at a Packer game, they can find me on LinkedIn. So LinkedIn, Sarah Jane is my first name, Milliren. They can go to aldenishome.com, and up at the top, there's a drop down for About Us and our leadership, and they can read more about who Aldon is, and there's a link to myself there. So if anybody wanted to reach out, they can click on that. My email's in there, my phone number, and my LinkedIn.
Perfect. So check out aldenishome.com. Connect with Sarah Jane on LinkedIn. Jane, it's been amazing to have you on. Make sure you check out tourstudios.com as well. Deep Blue RE Capital or Deep Blue RE, the home of Deep Blue Capital as well. Almost fumbled that up there.
Yeah,
Almost,
you did.
man. We're like on.
It's because you've been traveling so much. World Series.
Just forgot everything.
Time for another Red Bull.
Yep.
Yep.
I don't know if I can do any more of those today.
Don't be scared. Your afternoon jolt, bro.
Yeah, exactly.
It's called founders mode.
Founders mode. That's a big thing people are doing right
it's a new
now.
thing.
It's just an excuse to act like a jerk.
Yeah.
No, don't do that.
So deepbluere.com, just go register there. That way you can get a call from someone like me. That way we can talk about your investment needs.
Yep.
We got some great opportunities coming up. So deepbluere.com, sign up there. And then, of course, like always, go leave us a review, 5 stars, hopefully only. That way you can get some Deep Blue Capital swag. So episode 60 in the books.
Yeah, absolutely. All right. Thank you, SJ. We really appreciate the time. We'll see
Appreciate
everybody next week.
All right.